Today we are about to discuss the pre-election movements within the NIFTY and the overall market here. What we are concerned about is that the market has already factored in who is going to win, right? It's not going to be a surprise whether one party or the other who's going to win, because mostly the market already, they fixed who is going to be the next prime minister or next ruling party. And therefore, the key idea before getting into analysis here is that the energy for the enthusiasm is already being used up throughout this month, say for the previous 2 to 3 months. And what we are about to see tomorrow on the election result day is that definitely there will be a spike in the volatility. See, today the India VIX actually raised to some 26.20 or something like that. And the volatility is expected to further increase tomorrow. But the fact is, the trend has very less energy within it, and we will confront the whole thing through the analysis. But the important fact is that the overall strength within the trend has been already exhausted, and a little of it really remains. So let's get deeper into the analysis by having these four thoughts.
We are about to discuss the wave analysis of the ongoing cycle, and that is starting from the 17th June of 2022 and lasting till now. And what is projected is at the 5th or 6th June, there is a strong time resistance from this point of initiation, which is 720 days. What is 720 again? 720 is 360 into 2. A complete circle is 360 and into 2 gives 720. That is an extremely important time resistance which we are about to face in a couple of days. So this again, as how the price resistance works is, it's not an exact point in time or price. So we have projected that to be 5th or 6th June, but maybe the resistance will be on 4th also. Just keep in mind. So having these considerations in mind, let's dive into the deep analysis. The wave. This is 5, this is 5, this is 9, 1, 5, 5, and this is also expected to be 5. So the whole structure here is comprising of 1, 5 and 9. So nothing apart from these three numbers. So by having all these things in our mind, let's get to the charts right now. So this is the chart of NIFTY 1, and the analysis that has been proposed before is also the chart of NIFTY 1, which is the GIFT NIFTY and not our NIFTY, because the GIFT NIFTY delivers an unambiguous, easy to find and define patterns. So that is why we are choosing the GIFT NIFTY over the domestic NIFTY, just for the sake of the simpleness within the analysis, because it has its own continuity rather than the domestic one. So these are all the trend lines that have been drawn to project the time resistances and the price resistances combined. So by taking the important points throughout this cycle, we have drawn the subsequent trend lines, and the trend lines you are seeing is an extension of the same. This is the first trend line by connecting these 3 points, and this will be an extension to this trend line. Similarly, this and this will form a first trend line and an extension of which is the second trend line. The trend line here is an extension of this starting from 3 years before. By having all these things in mind, let's now understand what is actually about to happen. This is the extended chart variation where you can see the maximum upside. As you can see, the trend lines, the mid of trend lines, actually the dotted lines, this will be the first area of resistance, and this coinciding with the later parts of the trend. This is the trend line drawn from the later parts of the trend, and the same will be the extension also. Here all that we can info is there are multiple trend lines coinciding with one another, so that creating a stronger resistance in price and time. First point is this, second is here, and moreover surpassing these two will result in an important, this is a very important, this point here is very important resistance, because it has been drawn from 5 years or 5 to 6 years before this point, where the trend actually initiated the major cycle. That's what I'm talking about. Having all these things, we'll just now understand what is it, the resistances, actually the resistances in the domestic Nifty, where these resistances are just the levels and not the exact points where the market is really expected to face the actual resistances. This is the area of resistance, just remember that in mind. And more importantly, the resistances are projected for the domestic Nifty and not the Nifty 1, because it is always a forward contract which is in act when it comes to the Nifty 1. So this, as I discussed, is the first area of resistance in domestic Nifty, and after which surpassing these levels, I have already decreased the levels than the actual ones by 20 points or something, because this is the margin of safety that I can derive for the overall mass crowd. So consider that it is 23,500, but we have given 23,480 as a margin of safety for all. And after this, supposing which the market might extend its area, its price increase will be up to this area, because this is the line that's directly coinciding the weekly chart, and this is not like the previous one. There is very strong resistance in price and time, because it has been carrying all the trend from 5 years or 6 years ago. So always bear in mind that this point is very, very, very strong, which is 24,220. I strongly suspect that market will surpass any further from this point, and as already stated in the first slide itself, after this move, which is 24,240 or 23,480, depends, and this in turn makes way for a bigger correction immediately. Note this, immediately after the prices has been reached. Market has nothing to do with the the structure. Whatever the optimism is built up, or the volatility that has been building up for over 4 to 5 months, this has to end somewhere with the positive trend, and the same volatility will be shifted towards the correction that is about to happen. This correction, we will discuss about it later, but whatever you want to know is that this area will be the area of profit booking for the trend from here, and the correction will be deeper. So given the volatility concerns due to the election day, so the results, whatever it might be, this is exactly what is going to happen. And moreover, the Dow in US, actually it also slid yesterday. So mostly I don't do the correlation part, but here the thing is, it is also giving a cue that the trend here might reverse. So when it comes to our platform and our indigenous markets, all that we can say is the analysis also supports the correction's imminence. So bear that in mind and trade safely. Thank you for watching.